Hello, ladies and gentlemen. We are doing our first live stream mainly because we were looking at cryptos, and Justin believes that, and I have happened to come around too, that there is a pretty tight correlation between cryptos and GameStop, and cryptos are absolutely skyrocketing right now, which leads us to believe there might be some interesting price movements tomorrow. Justin, what are some possible explanations on why your the crypto GME tie-in?
So yeah, good question. Hell if I know. There was that dude we talked to maybe about a month or so ago.
Oh, some guy on
He
Discord, cool guy. He hit us up in the comments, but we're in
yeah.
their Discord. Awesome people.
Yeah, he had a really good, probably one of the best technical analysis I've seen, where there's some like offset things. So here's the thing, right? Much like like Girk on this stuff, like I try not to get into like the weeds of like the mechanisms. For example, like Josh earlier this weekend, you and I were talking about like how many options needed to be exercised, to create like a gamma ramp or something. The answer is like I have no idea, but the way I kind of think about it is I try to think of really big picture and say, okay, well, listen, if we're just seeing more, or if we see the option interest, and going back to the gamma ramp, exceeds what the market makers thought that they would have been, therefore they're not prepared. Because they're not prepared, they have to play catch up, and the act of playing catch up is what creates the stuff that we want to see happen in the first place. So with the crypto stuff, so this is coming out of my ass, right? Because I honestly have no idea what's going on here, but my suspicion is this: if the system's running into a collateral problem, and go back to what last year, middle of last year, think like the Jeff Snyder, when he first blew the whistle on this. If you're trying to like show collateral, show that you've got enough reserve assets to maintain a margin position or to maintain margin, if you have the ability to, I don't want to say manipulate, but even though we're all thinking it, but like if you had the ability to influence the crypto markets, and if you had large crypto holdings, and if some dumbass was willing to give like a market maker, allow them to trade, or allow them to use like crypto holdings as a form of collateral, then that would be a very easy way that you could beef up your own collateral without having like to do much. And the reason you might want to beef up your collateral is because, well, you need to buy more stuff on credit, or you have to manage more on credit. So
Yeah, I think another explanation could be the Bitcoin can be very easily manipulated because it is a smaller scale um, enterprise, and you can trade it 24/7, so there's no real issues there. So if they need
yeah,
to pump up their collateral reserves, they can pump the price of crypto, therefore get more dollars, which they can then put up as more collateral. So either way, we don't really know what's going to happen. There was a bunch of options that expired in the money Friday, closed above 150, which was pretty big, and we are trying to figure out how many of those gets exercised. If anybody knows a tool that they could use to figure that out, we would love to know.
yeah.
I do know there was, I think, like 15, 20,000 options, maybe even 25,000 options that expired in the money, which would be like 250,000 shares, give or take. I don't know.
Yeah.
Depending on how many people exercise, that could make a massive difference on the buildup of this delta and gamma pressure, and how many people renew their weekly options. I mean, if we need like the really thing that is going to kick this off is if we get massive option FOMO. And to that, we just need more people buying options.
Yeah, definitely option was going to be a thing. Like my guess is, so setting aside, the crypto connection, because again, like I'd be lying to you if I told you I knew what it was. I think that Monday, I suspect we'll see price action on Monday and that would be a result from, the gamma. So probably peak on, or Monday, Tuesday-ish, then I think things would probably calm down again. And so I think the real question is going to be what's going to happen like Wednesday, Thursday, maybe Friday of this coming week. Because if people see that, wait a minute, this past Friday being what was today, the 27th, the 25th, whatever, right? If people see the 25th, like, oh, wait a minute, we were able to drive it up, and if we could just close, or we could buy options that close just in the money, and we saw this price action the following week, then you suddenly have this a possible development of like a cyclical pattern where it's like, okay, well, let's just do the same thing again next Friday, and then the Friday after that. So curious to see what's going to play out on that. But here's the thing, right, Josh? If you and I can think this, so can I don't want to say the bad guys, but so can the other guys. So can the other guys. So like I there was if we had a perfect, Rickards makes the example, if we had the perfect way to predict the weather, like 2 days, 3 days in advance, and everyone like needed to wear a raincoat or take an umbrella when it was raining, the weather wouldn't change. It wouldn't matter at all, because the weather's going to do what the weather's going to do. But if we had a way of like perfectly predicting the stock market, and that got out into the public, well, guess what would happen? Everyone would like pile onto it, and so like it would distort. It's there's some fancy ass way of saying it. The system that develops with feedback early on, and so like it becomes much trickier to predict. I wish we could remember the fancy way of saying that. I can't. It's Sunday, man.
And I mean, we don't really know what we're doing here. We usually, so we just started hired some editors. We're waiting on one of the videos to come back to us, which we'd have loved to post. We don't really know what we're doing. We just said, fuck it, let's go live. Crypto's pumping. We kind of want to see what is going on tomorrow. We thought we'd maybe get some question or something. We see Steve E in the chat. There's no one else. We got
Yeah.
viewers. Wow.
There we.
It is. Do the super high frequency still have enough dry powder to rug pull the shit out of us this week? 2 consecutive weeks of running would be amazing, but why would they risk it? This is something that this is sorry. I see. I thought I looked like Street James. This is something that Pi-Fi was talking about. He was saying there's a lot of catalysts to really lean either way. He was saying, well, either see a massive run, which would probably be led by more option FOMO, or we could see a rug pull. Something that I would be looking at to indicate a rug pull could be coming is if we see XRT's short interest start to decrease and then come off rug show. Something that I would really like to see is if, let's say, if GME went on rug show again, then the Wall Street bets crowd would probably come back with massive option FOMO. It's really a 50-50 right now. Nobody knows. There's a chance that they can rug pull us, and there's also a chance that we see a magic rug that goes straight to the moon.
Yeah.
There's so many caveats, and nobody really knows what's going to happen. We are obviously have our confirmation biases, which means we'll probably finagle our ways into words to make them seem like we are bullish, which we are, but we are pretty much always bullish. So that is a tough circle to square.
Yeah. I also would say, going back to right here, do they have enough dry powder to pull the shit again out of 2 weeks? Here's what's going to happen. If the delta risk wasn't managed, or not managed correctly, but like if more options executed and the market maker, that is the option market makers, have to go in on Monday and settle their obligations, and if retail is able to time it correctly, retail will actually be sitting on dry powder. And so then, see, I think next week's going to play out in 3 stages. I think you're going to see the after effects of what happened Friday of last week, maybe Monday, Tuesday-ish. You'll probably see a crash back. My guess is you see a lull going back down. If the bad guys have dry powder, that's, I think, when they're going to fire it. But they don't want to fire it all, because at the same time, too, what I said earlier on, if retail's figuring out, well, wait a minute, Thursday, Friday, we can basically drive price action. So who cares about what happens on the middle of the week? As long as we can game this thing right, we can just keep, it's almost like a ratchet, it just keeps ratcheting up in one direction. So there's that. The other thing, too, is, with the dry powder, like, there is some connection to crypto here. I don't know what it is, but like I would bet a dinner that there is, or when I say some, connections.
So
yeah.
Well, Stevie again came up with a great question. Before, most would expect a crypto to dump if they can't meet the margin requirements. I would assume yes, that is something that I would. I happen to think that they are probably leveraging themselves up on crypto, which allows them to manipulate it pretty easily. So if they were to dump everything, they'd probably sell all of their crypto. But Justin, I'll take you up on that dinner offer. If MOS starts, then if there's a tie into crypto, I'll owe you a dinner, but I will also be extraordinarily wealthy. And if there is no tie-in, then you will owe me a very fancy dinner.
Yeah, that sounds good.
For you guys that watching, we have made a few bets before, and right now I owe Justin.
We both lost our own bets. That's the thing.
He owes me one dinner, so we are really gonna wild up those.
Yeah, well, anyways, like I said, we will see what happens.
What are your views on direct registered shares? I know Justin has quite a few direct registered shares. I don't. I only have options. I do like the idea, as I don't see really any downside. I like a diverse. You do not want all your shares in one broker. I don't think you would want all your shares in computer shares. I think you probably want a diversified amount of shares per different counterparty, because when you're looking at these brokers, they're just different counterparties and all of them have risks.
Yeah. So I would say that as far as DRSing goes, there is probably a time and a place. Like I spent a lot of the day, like, seeing what's going on in Superstock on the Reddit forums and some other less savory places on the internet. But I think the overall zeitgeist on Superstock, I think they overestimate the importance of DRSing, but that's not to say it's not important. I just wonder if or back up. I think maybe up until only yesterday, or only until last week, I think super stonk, collectively the hive mind, overestimated the importance of DRSing and underestimated the importance of options. My guess is what's going to make this thing pop off. It's going to be a combination of things where I think you both see options and DRSing working in tandem with one another. So
The thing that I think
yeah,
I think direct registering is going to make the squeeze bigger and longer than people could imagine, but it's not going to initiate the squeeze. But what it
yeah,
could do is, let's say they have one of these. It's nice to track how many people direct register shares as a best guess on how many shares there are out there, but it is not. There is not many circumstances that direct registering your shares is going to have an impact on a MOAS, because the way that they're going short, they don't need your shares. They are creating synthetic shares instantly. It just poof, they're fugazis. They didn't exist, now they do. So they don't need your shares to go short. It's only when they really need to start covering that they start to look for those shares, when these cost to borrow rates go up and the amount of shares available go down from these IBK. I
yeah.
know like a 23% cost to borrow with very little available shares, and that's what direct registration is doing. I think it's going to, once the squeeze starts, it will exacerbate it, but I don't think there's a scenario that direct registering your shares really starts the squeeze.
Yeah, no, I would definitely agree with that. Like, I think it's important that's done, if for no other reason, that you've got one other spot. Like, if you're holding all your options, which is something I need to address, but like, you want to probably have multiple brokers and multiple ways, or you want to have multiple bullets to shoot at this thing. And so there's probably an advantage in that. Just want to go back to this one real quick too, where it's talking about this one. Just as a side note, you will probably see everything dump in a margin call. Think back to 2008 when you saw the Japanese, I think it's Japanese market sold off. The reason, even gold and metal, or even gold and silver, or whatever, right? And what's going to happen there is that when people are margin called, they sell whatever they can, not what they'd like to sell. So you generally see the dip, and then you see the rip after that. So the answer is yes, yes for that one. Or
This
my guess is yes.
this is really tough, and this is something that me and Justin have been putting a lot of thought into. Well, this run last week is good news, and the cycle series still holds water. Hoping everyone can learn how to ride the ups and downs with options to make money until a squeeze, if it happens. Here's the thing: we don't know if this is the start of a squeeze or if it's just a little cycle run up. And we're sitting on, let's say you're sitting on massive option gains, something that you have never really seen before. If you sell now, you could take massive profits and hopefully allocate again towards the next cycles. But what if this is MOAS and we go to 1,000, 2,000, 3,000? Then you sold and you didn't catch the MOAS. You got a big run, but you did not catch any MOAS. So operating and knowing when to sell, I think, is much more important than knowing when to buy. It is much more difficult to manage than pretty much anything else. Because me and
Yeah,
Justin have been talking about this as well. I mean, Justin has a extraordinary position in options. I mean, like a very big position.
bag holder is the way to think
No, I
about
know.
it.
I mean, they're pretty much flat, but like, what do you do in that situation when
Yeah.
it is very tough to manage? You can maybe sell, take some profits, and then continue to ride up. But if you're sitting on a small position, let's say you're one of the smaller guys and don't have 5,000 options, and you can't just sell incrementally, because then you're going to miss the vast majority of the gains if there is a MOAS style event.
Yeah. The other thing too, and this is something that PyFi mentions, which there's definitely some wisdom in this, is that when some fun saying, like, when this thing kicks off, it's not kicking off in a vacuum, right? It's not like GME's just gonna, or whatever, BBY or whatever meme stock's gonna go up. It's like, no, there's gonna be a lot of collateral damage that's gonna reverberate through the market. So like, expect an incredible amount of shenanigans. You know, that Gensler tweet that came out, a month and a half ago, whatever, right? Oh, we can freeze trading for 10 days, you know. They will pull everything. So just mentally be
Even
prepared
look
for that.
at the nickel right now. It is fucking ridiculous. They are, like, instantly they're saying, oh, by the way, you can't let a commodity go up. You can't let
Yeah, so do we. So do we.
you can't let it go up more than 15% a day. So nickel fucking freezes trading every single day within the first few minutes of trading, because JP Morgan is sitting on a thick ass bag of nickel shorts and everybody knows it. And without that, nickel, the price would squeeze and there wouldn't be enough people, there wouldn't be enough nickel to supply the price.
Yeah. So so like, I would say, yeah, the way I would respond to this one is that, like, if one has the financial capacity to do this, I would say, so taking a page from like the precious metals world, like, you probably, again, assuming one has the abilities, you probably want to, like, maybe put like 10 to 20% of your liquid net worth into something like gold or whatever, right? Just as like an insurance policy. Think of it as like a financial checkpoint to save your financial game or whatever, right? I think the same thing goes through with GME stock, where it's like, okay, listen, this is the core. Like this is our core GME position that we are not going to touch. And let's just say your goal is, I don't know, 50 shares or whatever, right? Then you might say, okay, well, beyond 50 shares, I'm willing to play around with, or whatever, right? So that's how I would kind of, think about it. Is I would definitely say I would start with DRS, because I don't think you can get safer than DRS. But at the same time, too, you might want to say, once you get to a level you feel comfortable with, seeing, okay, well, now I've got that taken care of, how much more am I willing to risk? Because like I said, I mean, Josh, you said it earlier, like when you play with options, I mean, like it makes you fall in love with it, and then it rips your heart out. So you got to be able to, ride the ups and the downs there.
Yeah, Phil, see, this is something that I have. I don't just trade GME, but that's my biggest position. What are your thoughts on being a fake rally for the S&P? I think there's a lot more downside that needs to occur in the economy. For something that I've been talking about for a while, the way these the dealers are positioned. There is a great post by Kevin Meir on the Macro Tours. It's a paid service, but if you really like the intertwines of the markets, he's a great guy for it. He pulled pretty much every single some of the. Sorry, sorry, that's sorry. He pulled all of the rallies in the biggest stock market rallies in history, and virtually every single one of them came from bear markets. And if you think we are in the start of a bear market, there are these snapback pullbacks because we're going really hard down. But the way these dealers are positioned, they have to buy back a lot of stock really quickly. So we're seeing this super volatile run upwards, which is having a vast impact on. I mean, I've been buying some puts on the S&P because I do think that there is massive risk in the economy. Virtually every single yield curve is starting to invert. That so far, if the twos tens invert so far in history, every single time the twos tens have inverted, there's been followed by a recession. There's a lot of them have already inverted. We are seeing massive signs like repo market fails, which means there's more risk in the system, which me and Justin have tied potentially coming back to GME, but we also have a confirmation bias.
Yeah, there was a thing too. So just so you know, like Josh is very much more the markets guy, but like real estate's really my main thing. But anyway, so like I will note this. One of the things that I do think super stock. Oh no, back. I'll walk that back. I find the reverse repo program to be particularly interesting. I don't think I'm glad Superstonk's tracking it, but I think again maybe it's RRP. It's an indicator, but it's a very nuanced indicator, and I don't sense that like a lot of people that follow it like understand the nuances of what's going on there. But the point here's the TLDR on that. Generally, I suspect the higher RRP goes up, the more bullish that is for the GME thing. And I think Josh too, like T-bills actually fell beneath the RRP purchase window, or the rate that we're paying.
Like the 4 week, I believe the 4 week. The reverse repo with the Fed is pretty much just the Fed giving treasuries to the counterparty. So that means people are going to the Fed for treasuries. And why would they do that? Because there has to be another reason why somebody wants treasuries. They want treasuries for some sort of reason. And if you follow any of Jeff Snyder's work, this is very important, because why are they going to the Fed for T-bills that they can get at the market at a lower price? If you go into the market at the 4 month or 4 week T-bill, you can get it at a lower price than the RRP. So why on earth would you ever go and get something at a higher price? The only explanation is that there's another reason. One would be that it's counterparty risk. Who would you rather work for? If you go into the repo market and get a T-bill, you don't know how many times that thing's been changed hands. You don't know if the counterparty is good for it. We see we see repo fails spiking. So this was probably one of my biggest theses, is that it was a counterparty risk issue. But if that's a counterparty risk issue due to GME, or is it due to just the broader market as a whole? Because the Eurodollar system, which is the offshore dollar supply, is so vast and deep and intertwined in just everything that goes on into our lives.
Yep. Just mention that not to bore people to death with the onshore and offshore dollar market.
But I love that.
Yeah. Yeah. Well, so what's I think so, like the other thing I really like is geopolitics, and I think it's very interesting what's going on right now with the dollar, particularly with Saudi Arabia. What last week announcing they're going to take, they're just starting to do bilateral agreements. So in other words, you're seeing the world transition off of the petrodollar. So let me just put this in English because this is all the language they use to describe this is designed to be complex. Imagine you go to like a chain of restaurants, or whatever, right? So like Fleming's, Carrabba's, a bunch of others. Like they're all in the same brand. It's Bloomin' Brands behind the scenes. So if you buy a gift card to one, you can kind of use the gift card anywhere you want. Okay. So imagine like the U.S. dollar is kind of like a gift card, right? And as long as you can use it to buy things that you know you're going to buy in the future, there's many restaurants, stores, whatever that take it, you're not too concerned. But if something comes along the lines and you say, well, wait a minute, if I can only buy one thing with it, I don't want that one thing. I'm just going to go to the restaurant or go to whatever store I can before they make the policy change, before I think they're going to make the policy change, and just buy whatever I can. This is where you would see whenever you hear people talk about offshore dollars flooding back to onshore. These are these foreign dollars that will be coming back to the United States and just buying up anything under the sun. But here's where it gets interesting. That would be a massive, massive, massive boost for the market, create lots of inflation. And I would also say that if GME does pop off with the meme stocks popping off, that'll be a massive deflation event. Because what's going to happen is that when the shitstorm starts, the banks, primary dealers, et cetera, are going to have to liquidate pretty much a ton of holdings in order to meet their margin calls. I suspect they'll fail, but nonetheless, the holdings will be liquidated. That'll put a lot of selling pressure on the market. So I note that if you have a lot of down over here, it's always backwards on the camera, a lot of down over here and a lot of up over there. These two things, I'm curious to see how they net out. But
Yeah.
anyways,
So, Justin can go. You can rant forever. Let's get back to the questions. What
yeah.
contract are you guys holding? Are you doing LEAP or holding April, May, June? So, I'll tell you.
I'm not going to answer that one. So.
Justin, I hold quite a few Aprils. I have quite a few that are deeply in the money now. Some at the money that I bought a while ago. That it when
Yeah.
I'm gonna trade like all my ones that were say at the money to like I bought a lot of 150s a while back that are up vastly. So that feels pretty good. But I do have some 510s too that I bought a long time ago that don't feel too good. But they're only down what
Really? Really?
Yeah, Justin has a thick position there. I'll hold a lot of June 680s because my goal, if MOAS does happen, is maximum amount of leverage for the lowest cost possible. So I do hold a lot of Jan 2023 980s as well, and some other closer at the money. But I don't have the capital that Justin has. So if I want, say, 50 to 100 contracts, I need to go further out the money. And if that takes more time, and I need to go pretty deep out the money, and I want to go pretty far out. So that's pretty much what I've been doing for the max amount of leverage, though, because if this does happen, I want the most potential gain as humanly possible and the most amount of wiggle room. Because if I have, say, 50 contracts, then I don't have to worry about selling one to take some profits. And because I like to take profits on the way up. And if I was holding 5 contracts, then it is very difficult because they're like, fuck, is GME going to go to what, 5,000, 6,000, 7,000? Then it's very difficult. My goal is obviously to exercise every possible contract. Justin, what about you?
Yeah, so pretty much the same thing. Like I've got a large position build up in April, June, and a slightly smaller one for the 950s in January of 2023. Probably for the Aprils one, I'm taking a beating on my Aprils. Let's just say now it's not as bad as a beating as it was at the start of last week. So probably for the Aprils, I'm looking to roll those, and so I'm really curious to see the price action that happens on Monday. That might be a exit point for that. Kind of like Josh was saying, like I think it makes sense, or at least what I've found very beneficial is like I have like my core option position, those 3 core option positions, and then like I'll trade around them too. So I'll have some like, well, we'll pick up a few like very close to at the money type things. For example, like I think I 2 contracts I think were exercised. I exercised 2 contracts on Friday of last week. Might write covered calls. Another thing that I've been playing around with too is GME is the main thing that I follow, but after Cohen's buy into BBBY, that's kind of on my radar too. So I was playing around with selling some cash secured puts. So those are very very in the money, very, very far out, like 2024. And the thing is here's what I've learned. It's like my ability to guess timing is atrocious. So yeah, thank you, Josh. Thank you.
But he's a realistic guy, so he likes to hold things for. He's a dinosaur. He likes to hold things forever. And
of course, like it's like it hasn't been a year. Why on earth are you reevaluating the position? Jesus. Yeah. So I definitely like the idea of going further out. But the short and direct answer to your question is there's a large concentration in April, June, a slightly larger concentration in January. I'm looking to roll my Aprils, seeing what's going to happen early next week. Or excuse me, this coming tomorrow. And I would probably go out to a combination of January and June is probably what I would play with. And I would also still probably play with these weekly things. See, here's the thing, not to go back and belabor the prior point, but like if the Wall Street Bets crowd, Superstonk, Biz, if they all get into like the habit of saying, well, wait a minute, like there's like this pattern, like if we can get enough contracts to close in the money on a Friday, we can predict this gamma run or this gamma squeeze Monday, Tuesday. So you get like a blip, then a blip, then a blip, then trading suspended, then a blip or whatever. So that's kind of, I think, more from a psychological point of what you'd see happen there. Or hopefully.
Yeah, Dr. GME, what is up, my friend? We've seen you. Been a long time supporter. We thank you very much, Kevin, as well. Stevie, back with another great question. What do you think will happen to the other stocks after other shorted stocks after all this is over? Like, how will they move forward with the disaster these super high frequencies have created? I don't know. And that is a very, very good and probably a very complex question when you really break it down. Because what happens to GME if let's say we see a scenario where GME is at $10,000, and what does 3 years later look like?
Yeah, so think of it like this. Like at the end of the day, like the dollars you have or whatever, even physical gold, if you have physical gold that you have, the reason you hold it is because you eventually at one point in the future want to trade it for something. And so the answer to your question is what has to happen is there has to be a reevaluation of the mechanism that takes what we think we have, the wealth that we have, that we think we've accumulated, whatever, right? And what can we actually buy with the wealth? Like there's going to be a reevaluation of that. And it's probably not going to be, or as there will probably be many winners, and just as many winners there will be so many more losers in the long run from, or at least from the short fallout from that. I think what you'll see happen is that the public there will be like an awakening in the public zeitgeist where they say, okay, listen, the existing systems that we had, that we trusted or whatever, have completely failed us. And so you would probably see this open the door in the public's mind to some sort of blockchain solution in the sense that like every share is tokenized, serialized, whatever, and you can see who trades with who. So you'll see very clearly. So I still think you'll see, the options exist. You'll still see futures exist. You'll still see, these exotic transactions that go on, but it'll be much more transparent, much less opaque. That's I think going to be the fallout.
There's a great podcast on this too, which is the state of the market. I think Eric Townsend. If you watch Macro Voices, Eric Townsend kind of he's done some work on it. Basically, they try and figure out what will the future of the stock market look like. I have no real edge there, so I would recommend you guys to those fellas, but I am not entirely sure what the name of the podcast is.
Yeah,
we were kind of talking about this. Light of my life one. Gert is saying there could potentially be a rug pull like we saw in November and June. Yeah, absolutely, there could be. And you saying basically there's like a 50-50 chance. We don't really know. I was kind of leaning on the 50-50 chance as well, but crypto is pumping hard right now, and I think that is not by accident. So if I had to take a guess right now, if you put a gun to my head and said, Josh, will tomorrow be up or down? I think we will at least open up. I'm not too sure what we will close as if, but I'd say we're opening up tomorrow for pure gambling degenerate like I am.
Yeah,
for us to not have a rug pull, we need more option volume. We need people to YOLO. We need these degenerate Wall Street gamblers to YOLO into weeklies, because that is what drives the short-term price movement. It is these option chains of people buying, holding, exercising calls, bringing the delta pressure up, forcing the option guys to buy.
Yeah, so I mean, the way I would answer that one is that I do think Monday's going to be a very positive day, and like I don't even know if the shorts, if they wanted to suppress price, like I don't know how effective they would be at that, particularly if you have the option market makers that are hedging in. Like think about it like this, like if the shorts are Godzilla rampaging around and we're us, like we can't take down Godzilla. We need like another monster to come in and do battle on our behalf with Godzilla. That would be like, getting the option market makers to go into the market and hit the bid at whatever the price is. Because then you have like two monsters fighting each other, which is incredibly convenient. Oh, Josh, I just want to say one other thing too before the other, for the last question there's two books you can check out if you want to have like more of an understanding. It's Layered Money and the Storm Before the Calm. So just a heads up. If you want like more of a backstory, like that'll give you a lot of perspective of how history's dealt with this before and kind of maybe where we're going to be at going forward.
Yeah, what do we make of Ryan Cohen's Twitter activity? Justin does not use any social medias. He is on the Bizzes and the Chans.
I don't know what you're talking about. I have no idea.
I'll expose him. I don't care. He seems to really be projecting confidence. Am I reading too much into this, or is it? I feel you. I feel like sometimes I'm reading too far into it as well, Jay, but he really does give these super subtle hints that he seems like he knows exactly what's going on, especially with his buy-in dates. Well, I think that is very convenient, especially and when he moved up earnings. I think the reason for this is because he knows these FTD cycles. I don't think it is pure luck. It could be. It absolutely could be. I also don't. I could be reading too far into it, Jay. We both could be crazy. We all could be crazy, and we could be wrong about everything because we don't know anything.
Oh, this is an easy one. A life of degenerate gambling, hookers, prostitutes, and below. Next question.
Thank you,
So,
cool cat. Uh,
yeah. Okay, let's see. Is Greg?
oh, oh, cat's coming up. Yeah, click on it.
Yeah. Josh, let me go back to just one other thing on this front. So I would take maybe a more nuanced approach on this one. I would say that I think Monday, people are going to feel really, really good on Monday. And I also think that if they want to manage, that is the short term to manage the psychology, I would look like the middle of the week if they're going to do something. Because if they can get it down, then people say, well, it already crashed back down. I'm not going to buy any more options. Like, I think what they don't want us to do is to keep trying to play the weekly option game. And so I think their actions will be predicated upon what can be done to dissuade as many people from doing that. And so I'd say you have the run up and then you have like the crash down. That's how I think I would play it. But again, I would note before that if retail figures out how to or if retail plays this Monday, Tuesday relatively well, retail's dry powder is going to increase, which is going to be a huge plus for retail. And then, but we'll see. We'll see where it goes. But I think Monday, Tuesday, good. Middle of the week, meh. Friday's going to be. It's like this past Friday. It's going to be a battle all the way to all the way to close. So
Is 100,000 possible? Any clue or range? Appreciate you guys. Seen a few of your videos. Gonna sub. Thank you very much, Jonathan. I think Justin thinks it will go a lot higher than I.
yeah,
It all depends. If we see a scenario where, let's say, next week we see an astronomical, say let's say 3 million calls get bought, that would be 300 potential million shares, and let's say 50% of those get exercised. If there's a scenario where the entire float of stock gets exercised, then it would be impossible. There would just be a limit up to who knows what because there wouldn't be enough shares to really settle, especially with these DRSs. So it is theoretically possible, but highly, highly unlikely. The probabilities of this happening are extraordinarily low. But because there would be the government intervention, I think it is highly unlikely that they would. I think they would if there is a scenario where, say, the entire option chain gets exercised, then there will probably just be a government bailout and payout like they did with nickel. Something.
yeah. So I definitely think like if you think that it's just retail versus the short hedge funds here, no, this is like the tip of the iceberg, and Lord only knows what lurks in the murky depths beneath it. But I would say that I suspect that those in the government that are high enough in the government to kind of like see the big picture and see what's going on, I think there's an argument to be made where letting the thing squeeze would actually be in their best interests, particularly if you're looking, and this is not to get geopolitical, but like if you're looking to do a transition from, let's say, the petrodollar as the USD as the world's reserve currency and several other macroeconomic things, actually letting a squeeze happen to let a massive amount of inflation occur. And like I said, if you wanted to kick the commercial banking system in the nuts, like this is actually a way that could be done. Now, there's a lot of moving parts in here, but my point, though, is that when you think about the government, yes, be aware that the government will undoubtedly intervene, but also be aware that there are those in the government that might find it convenient to let the thing squeeze through, but they can't necessarily come out and say it point blank. That's maybe a way to think about it.
Going on. Frankly, we don't know, and it could go either way. How do you believe the current DRS float tracker? How do you think about the current DRS float trackers? Do you believe that we need to direct register all shares or the shares in the free float? No, I don't think so. Simple answer. Justin, do you have any other thoughts?
Yeah, so I would say that the DRS, the stonkometer tracker on Super Stonk, whatever, right? It almost, I think it bullseyed, the projected thing. Because I mean, it's still like, listen, at this date, like this is what we think the estimate is. So as far as the accuracy goes, I actually would trust it, quite a bit. As I said earlier, I think Super Stonk overestimates the importance of DRS, but that's not to say it's not important. I think it certainly is. Imagine like you're playing a video game or whatever, right? And you've got like several ways to beat a boss, okay? And let's say like you start off the game with, I don't know, like a crowbar or whatever, right? So you can go up and you could probably kill the boss with a crowbar, okay? Like there's no ammo that you require, you don't have to find it, but you just have it over, right? Now it'll take forever or whatever, right? And like, yes, it'll eventually work, but if you can find like, the rocket launcher or whatever, right? Then, you might be able to get there a little bit sooner. So I think the answer is that DRS, I think I'm glad that people are doing it. I certainly don't think that it hurts. And if you don't know what else to do, that's probably a good place to start. I think maybe the more, I don't want to say sophisticated, but the more strategic play is figure out what you're comfortable to DRS. And once you get to like that level, then you say, okay, I've got my like core position set. Like these are my shares I'm never going to sell or whatever, right? And then from there you can say, okay, well, listen, now that I've got that set, I'm going to try to learn, about, other facets that I might be able to play in this regard. So that's I think how I would approach that. It's important, but I don't know if it's as important as people make it out to be. But again, to be clear, if you don't know what else to do, that's a great place to start. Start there.
Since Justin is a real estate guy, what are your thoughts on what are your thoughts of real estate being an inflation hedge, Justin?
Oh, so it's a bitter-edged sword. So like right now, we've been exiting and selling off. We had a fairly large portfolio of single-family homes, and a few years, back in 2015, 2016, we started moving up the food chain into multi-home, which is apartments and other commercial real estate. So the thing with real estate, if you ever watch any Gammon stuff, he hit the nail on the head. Is that when you can borrow fixed-rate debt against these assets, that's really the play.
You're
And like,
artificially shorting the dollar because interest rates are
yeah,
historically low. The problem is right now, the price of real estate is through the roof. So you're buying a very expensive asset class where the probability of it losing nominal value is very high. But if we go through an inflationary period and you get 30-year fixed rate debt at historically low rates, then you're looking. The debt is the asset here, and
yeah.
the property is the liability. That would be the way that I think about it. It does seem like we could be seeing a scenario, especially with mortgage rates increasing right now, where we could see some more appropriate prices. And I'm sure Justin would love to see some better prices and have them hedge on multi-unit.
Yeah, like I said, what we've been doing is, like I said, like real estate guys, they love debt. We love debt. That's real estate guy. That's real estate guy's fatal flaw in this regard. And so, like I said, we either sell or we borrow against the asset. And like right now, what we've been doing, and this is me personally, but like more so from like a corporate standpoint, we've been taking gains and parking a lot of gains in physical metal, like physical gold, physical silver, physical platinum. And the reason is it's just because we're too ignorant to figure out like what else can we put it in. But at least with the metals, it's return of your money versus return on your money. So that's the real estate thing. I want to go, Josh. There was this thing right here, the 100K. See, I don't know the answer to that one, but this is what I'll say. Like, if GME reaches 100,000, a million, 69 million, or whatever, right? It might do so, but it's not doing that in a vacuum. Like, this is the world, or this is a world of like the financial landscape being radically transformed and changed. And so it might be one of those things where you wake up one morning and let's say you've got more money than God in your account, but you have nothing to spend it on. So it's what I would say is I think there's wisdom in that, but it's not so much that GME might not reach the number. It's that if GME or BBY, whatever, reaches the number, at what cost? Like, okay, great. How many gigayachts are there? Well, I guess there's a few more now that they've been confiscated from Russia, but whatever, right? That's I think the thing that people need to keep in their mind on that one.
Justin has looked at BBBY and he sold a put going pretty far out, collected a thick ass premium. Pretty much.
Yeah. So like the BBY, like the fact that Cohen's in it, attracted, my interest as well. But as I said earlier, like it's the timing. The timing is what I just don't understand on this regard. So then you think, okay, well, listen, if you're bullish on an equity or whatever, right, and you want to have that be reflected in an option strategy. So there's two very simple ways you can do that. Number one, you can buy a long call. So you pay money or whatever, right? And then it's like, hey, well, listen, you have the right, but not the obligation to buy whatever the shares are on it before whatever the date is, your options that. The other way you can do it is that you can sell a put. And so you sell a put, now you have the obligation where you have to say, okay, listen, I agree. And I think it was a $45 put, or it was at 45 was the strike price. So basically like, I have obligated myself to pre-buy 100 shares of BBBY for $45 on or before January of 2024. So I collect, or I I collect a premium for doing that, although there is a margin issue you've got to manage. And at the same time, like if BBBY shoots up, then I basically buy the put back and I close out the contract, for a profit. That would be one way to play it. But I like what I like on this front is the time. I've got what 1.5, no more than like almost 2 years to see where this
That's not
goes.
a play I'm interested in. If I would have played something much shorter term, probably some calls. I'm not interested right now because I don't know it greatly. Instead, I'd rather play GME. Let's
Yeah.
go on. What are your current thoughts if there was a major margin call? And this is something
Yeah.
that we've been talking about for a little bit now, because if there was a margin call, they would have, I don't know the exact date, so please someone crucify me in the comments. I believe someone would like 13 to like 60 or 18 to like 60 days or something to before forced liquidation margin call. And if this is the case, then we could start to see the first spikes of that now.
Yes, but so remember this too. Like the system itself does not want to. So here's what needs to happen. The system has to call bullshit on the system, but the system calling bullshit on the system will probably produce an extinction level event for the system. So the system. And when I say the system, the hedge funds, the primary dealers, the investment banks, the DTCC. I mean, like everyone, like, nobody wants this thing to pop off. Okay, and so they know that the first person to actually like formally complain it's going to create issues. So far better to engage the faculties of delusion and just try to ignore it for as long as you can. So Josh, you mentioned these timing things or whatever, right? Like they might have to do it, but expect all the can kicking, expect all the generosity, all the grace that can be extended between other institutions, because they know if they put the metaphorical gun to someone's head, it's not so much that they're, if they force a margin call on someone, like what happened to Nickel, and that person, okay, well, great, we don't have it. And you already knew we didn't have it. So why the hell did you margin call us? Because guess what? Now you're holding the bag. And so the point is the system has to call bullshit on the system, but the system also has the strongest of motives not to call bullshit on itself. So
we need is the child to look at the emperor and point out that he has no clothes. As of right now, everybody is collectively agreeing that no one will say that the emperor has no clothes because they know they will get crucified. So
yeah.
the cost to borrow on IBK is just like around where it was during the first sneeze, exactly. And we see this. It is a massive news. But I would note that
Yes. Sorry, Josh.
we would note that I'm pretty sure the cost to borrow increased like a week and a half, 2 weeks, and then it slightly dipped off before the massive sneeze. It went from like 20%, dipped down a little, and then it came up towards like 50, 60%, wherever it was. So I don't know if we'll see a repeat. As of right now, we like to see the drastic increase in cost to borrows because that is most definitely a good thing.
Yeah. Hold on, I want to jump to this one real quick. So right here, this is what I mean when I say, the government doesn't step in. So think about it like this. Let's say it goes up to some obscenely high number or whatever, right? And if the government says, okay, well, listen, we're going to take 25% of this, suddenly the government's through short-term capital gains tax, even long-term capital gain tax, then all of a sudden the government's fixed its budgetary problem. Oh, and by the way, if the Fed has to step in and essentially bail out, let's say a DT or a DFMU, like a DTC, OCC or whatever, right? Then you actually have a way to inject a hell of a lot of dollars back into the economy, which is, I think, what powerful people want to have done. And so I just comment on this. Like this is actually a way to fix, in a strange way, the systemic problems we've had with the government budget. So
Do we have an estimate on the real float or real? We've done some estimates. We backtracked on one of our videos every single transaction done since 2019, and there was over 500 million shares short compared to the long. So there was 500 million extra shares sold than bought. So that would just be one calculation. Then you said, well, yeah, we saw a big rally in 2021. I mean, so that great. They covered that. Well, if we just do the short interest from January 29th to the current date, it was around 250 million. So that would still be like a 300% short interest float. But we don't know if how accurate this estimate is. That is just the sold versus bought.
yeah, and
Exchanges.
yeah, and when you think about it, like I wouldn't necessarily put too much like stock in what the numbers is. I would much more say, how's the change going? I mean, are the numbers going up? Are they going down? Are they going up quicker? Or are they going down slower? Or whatever, right? That's, I think, the real value where you see in all of this. And as far as this one goes, when a margin call occurs as a common news or immediately private until done, my response to that one would be, if you look back to what happened, what was it, April of last year? When did Credit Suisse margin call that Asian tiger? What was it?
I don't know.
It was like it's like Q2ish. It was like Q2ish of last year. That one, it started off in private, right? They were trying to keep Credit Suisse was trying to keep everyone like trying to keep the lid on it, and Goldman front. I think it was Goldman Sachs front run everyone, which is what they did back in 2008 when the mortgage. Or excuse me, they did that back with LTCM blew up in '98. So I mean, like these people will backstab each other. Like I mean, it's sharks eat sharks. But the answer to your question is that they would probably
It's
try.
private. Start
Yeah, yeah, they would probably try to keep it as quiet as they possibly could.
especially if it is such a catastrophic event where other brokerages are going to be on the hook, and nobody wants that. So I would say it's going to be private until it can no longer be.
Yeah, that's the guy. Yeah, yeah. Archegos, however the
Or Chigos.
yeah, there, however you say that's the one. But yeah, and the thing is like, even though everyone can keep it quiet, the point is, let's say you've got like 10 actors involved in this, so it's the prisoner's dilemma because if all actors like keep it quiet, they will all probably get the maximum benefit. But if one person squeals and dumps, they will get more benefit at the price of screwing over everyone else. So
I think what Hi-Fi needs in his streams is a foiler because sometimes there's a quietness. So I think when he gets angry, he needs someone that he can yell at.
yeah,
So we need a little boy that will take a beating from Pi. I take
bad
that.
analogy.
Sorry, Pi. We love you, dear. Uh, okay, okay. Shit, I lost my place. Oh God. Mm, questions. Looking.
Oh, here we go. Can you sell on computer shares though? No. So the answer is I think you can sell, but I don't know how quickly or how cleanly it's going to be. But that being said, like here's the big picture in all of this. Like setting aside direct registered shares because that's a computer shares only question. If you have, let's say you have 100 shares total, whatever, right? Maybe you say, listen, I'm going to keep like 50 of my shares in computer shares, and then I'm going to take my remaining, let's say 25 and 25. I'm going to have an account at Fidelity and an account at, I don't know, TD or whatever, right? Or Schwab or whatever. And the reason you would do that is like when this stuff starts popping off, like think back, like if you're familiar with cryptos, like every time cryptos pump, Coinbase goes down, even if you're on a DEX, you're paying $200 or $300 in Ethereum gas fees or more. And that's assuming the transaction even goes through and doesn't fail. So I think it's one of those things when this is popping off, like you want to like pre-identify like all the potential failure points. And I think a failure point is just, some computer goes down because it's being mobbed to death. So that's how I would manage that. That's how I'd manage that. I would say, okay, listen, if I want to sell shares, I've got 3 potential brokers I can sell shares to, and hopefully not all 3 are down at the same time.
Shit. Oh, we've already been on here for 46 minutes. I'm surprised we still have 56 people. What? Wow, you guys. Thank you. Thank you. This has made my night.
Yeah, hold on one second. That's what's this one. If you're holding GME options during MOAS, are you going to tighten your stop loss option? So this is actually a question I would probably kick it over to PiFi for this one. Like I said, if you watch his, there's a great due diligence he did, and then I think he reclipped it where he talks about an exit strategy. And the thing is, like, you don't actually know like how big it's going to squeeze. And so the question is, okay, well, listen, you certainly don't want to, you still want to capture gains. We want to capture gains at the highest way that you possibly can. So there's, check out that is the way I would check it out. Also, PiFi mentions the comment of holding options during a squeeze. So on paper, it could be incredibly advantageous, but like when the stuff is actually going on, there's an extra layer of complexity, and the extra layers of complexity here are probably not our friend. So
my goal is to exercise my contract. So these, say, 950, 680 contracts that I have, I would love to exercise them, the 510s. That would be the goal. And I know that if IV would be so ridiculously high and these price spikes, let's say it goes to 1,000, you could exercise your call. I mean, if you sold your calls, you would have astronomical gains to where you'd probably never have to work again with me adjusting the current position size. But we don't care about that. We're exercising our calls because that's going to put the maximum amount of pain. And that is what we also care about. Profits and pain.
yeah, yeah. Let's see. What's this? The Fed back locate.
Oh, I got.
Oh, yeah, Josh, you know what that one was?
I was reading a different question. On the show with Garrett, you all were discussing a Fed-backed locate on securities. I'd like to read that rule, and if you could let me know. Here's the thing. I've been I'm looking, and for some reason, I saw that there was a rule change, and Paiva was talking about it as well. So I saw it, and it was very there was definitely a rule change, but it virtually just vanished from the face of the earth, and I have not been able to find it since. I saw your comment, Prestige Son. You said, "Where's this filing?" I said, "Well, let me type on my computer and find out." And you know what, Justin? I found no such ruling. So I know you're daydreaming.
No, 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 no. It was the one where the Fed was talking about where you could go to the reverse repo desk and they would give you securities instead of if you wanted securities instead of I think instead of treasuries.
Yeah, yeah.
Was that the one? I think
Yeah,
because that's
yeah.
the one I'm thinking
Yeah,
of.
that was easy. I'm thinking of a different rule change because they fucking do this shit so often. So I'm sorry for my language. YouTube, please do not ban us. We would be hurt on our insides.
Yeah.
Wait, Justin, track that down. I'll answer this question because I have a story to tell. So
Oh.
dumb. Here, try and track down that ruling if you can. So dumb question, but how leveraged are these hedge funds usually when shorting? And more than you could possibly fathom. I have some great friends in the hedge fund industry. Most of them are retired because my average group is way too old. But a guy of Morris Sachs, he used to be the hedge fund manager at Greenwich Capital, and he would say, I asked him, well, what was it really like back in the day? Because on their balance sheet, he said, well, long he'd be 25 billion. He'd have about 25 billions of longs and 25 billions of shorts. And then off balance sheet, he said he'd have another 150 billion dollars of just completely outside the any calculations or any way to possibly track. Just these were the offshore dollars. And so if let's say the majority of these firms, and they didn't go bust during oh wait, they were considered a safe they were one of the safe guys. So if their balance sheet was $50 billion and then off balance sheet they had an additional $150 billion and they were one of the safe guys, what could these other people be doing? Because you can do so much offshore shit that can't be tracked by anybody through derivative swaps, through the repo market, through just using these offshore banks that can't be tracked by anything. So I'm going to say these people can be leveraged out of their eyeballs, like nothing that you could even imagine. I mean, they could potentially be 100 to 1 leveraged without anyone even knowing, because you only know when you have to pay the fiddler, and you can roll this shit so much before you actually get to pay the fiddler. Okay, do other professionals that you interact with have an option on the situation? Does this situation seem like an open secret, or are we the conspiracy theorists? This is a great question because I just recently got interested in GME, and the main thing that I always said to Justin was, Justin, if this is so obvious, why aren't any of these hedge fund guys looking at it? Why aren't any of these big players, super sophisticated, looking at GME? Because it is so obvious what is going on. And then I started to ask some of these really big guys, and the first look that you get is they're just meme stocks. I don't care. They're just meme stocks, and there's no other digging done. That is pretty much the only answer I've come to. No one cares. And every single hedge fund person that I talk to, any single humongously net worth individual I'll talk to about this, they don't care. So I have a few friends that have put on a pretty big position because they would trust my judgment in this. And uh, I'm sorry in advance to everybody that could ever take an advice from a little Rubleton like myself.
Yeah, like the so I guess with the people I've talked to, like there's this concept called the Overton window, and what goes on is that people there's two things in life that get you into trouble. What you don't know, and what you do know that just ain't so. And if people don't even think that it's within the realm of possibility, it just kind of bounces off of them. So I mean, but you talk to people. I mean, in my professional connections, it's real estate, right? So it's not really like markets for the most part.
My main
But
connections are mainly real estate as well. I have a few hedge fund buddies, but they're not really buddies because they're all old. I'd say they're more semi mentors, and they kind of tell me to suck a thick one whenever I mention GME. So I will sit in my corner by myself, and I really don't.
yeah.
Because I like to talk about the intertwines of the market and learn from them, because I could not articulate it as well as I need to, and that is what I'm trying to get better at. We've been going on for almost an
Yeah,
hour, Justin, so
that's true.
we got to wrap this up soon.
Yeah, so the other thing I'll put on it too is that someone asked earlier, like, does Ryan Cohen know what's going on? And here's what I would say: it's like, look, the people who operate, at this level, like, these are people who, I'm gonna choose my words really, really carefully here. a different set of rules apply to these people, and they know that a different set of rules apply to them.
Justin,
And
all animals are created equal, but some are
some
more
are more,
than others.
yeah. So what I would say is, I suspect someone in Cohen's position, like if one were to get there, you're not a fool to get there. It's the same thing with Ken Griffin or any of these guys, like Gary Gensler or whatever, right? Trump, whatever. Like, I don't think these people are fools. And I would also note too that if I was an evil supervillain, the best thing I would want is for people to think, I'm a bumbling moron, because that way people aren't taking you seriously. They're not actually like paying attention, because they're not paying attention. You can probably get away with a lot more. So my suspicion is yeah, they probably do see what's going on. They probably do see more than us. And I will just go back to something I said before. Like, what we see as retail, like, granted, we probably the people in the GME circle or whatever, right? We probably see more than the average person does. But even what we're seeing, like, we are just seeing the tip of the iceberg. And it's not just like in terms of like the mechanisms of the market. It's like, okay, well, how does this tie into the geopolitical angle? How does this tie into, security? I mean, like, there's like, this is going to reverberate across the board. And seeing all the ins and the outs of how that's going to play out, like, I mean, I know it'll influence, but like, I can't comment as to like how exactly it's going to play out. But it's not. This is not just an economic thing that's popping off here. There's a lot more that's going on, I think. So,
The last question we'll take, unless there's a super quick, what are
popcorn.
your thoughts between AMC holders and GME? I think it's probably squeezed, but the difference is in the insiders. The
Yeah,
insiders of GME are buying. The insiders of AMC are selling. I think insiders sell for a lot of reasons. They could be completely doing this for great reasons, but insiders only buy for one, and that is
yeah,
because they believe the price is going to go up. So I'm going to trust the insiders on this, I just think there's a lot. I don't know the intricacies of the market like Pi-Fi does. I'm sure he could give you a really well-rounded answer. I don't know. I'm just a dumb Rubleton, and I'll pass this on to Justin.
yeah. Like, I would say, like, so I think there's always going to be like, team red versus team blue or whatever. So okay, whatever. There's that. I do think when I look at I don't know if you've been seeing the stuff, but with Boston Consulting and like McKinsey and any of these, overpriced, do nothing, worthless management corporations or management consultancies or whatever. Like, when you look back, and who's the CEO of Ames? Like, Aaron's, right? What's the dude's name? Some of them in the comments, whatever. Well, whatever the CEO of AMC is, I'm a little bit. I always get a little bit of pause there. Now, I'm not saying there's not a play there. It's just not a play that I'm particularly well versed enough to put my own capital there.
So to
So
finish this up, Justin, are we going to pump or dump next week? Seeing crypto absolutely take off, I think, is a
yeah,
extremely good sign, because there just seems to be a correlation. Our guys in the Discord, thank you. You provide us with great data. I wish we could bring it up right now, but nonetheless, we think there's a correlation there, and because of that, I think the probabilities of pumping increased, because I don't know what the chart is, but I think we saw, I don't know, 10% spike this today or something like that. I'm throwing these numbers out a noose, and we saw a spike. So who knows what's going to happen? This is where I would say, hey, editors, please cut this part out, even though I've been the editor. So
yeah,
we get a
yeah.
whimsy.
Okay, well, perfect, guys. Yeah, no, thanks for joining us. Like I said, about an hour here, so that's pretty much, I think, pretty much it. Josh, anything else?
Nope. All Prestige Sunset Discord. No, we hate Discord. We
Yeah.
tried to develop a Telegram. Discord sucks, and people that use it suck too. I'm sorry. I'm just taking my finger out. I just hate Discord with a passion. It's not easy to use. We like Telegram. We fuck. We have a Telegram, and we don't know how to really.
Yeah, well, yeah, we'll get something put together on Telegram.
We'll get that. We have a Telegram. We just have not yet marketed it or just put it out there. So if you find our Telegram, if that's even possible, then join. But we will put it in the description or talk about it next video.
Yeah,
Do we throw the Telegram in there? Because I wouldn't even know how to do that. Justin.
yeah, I'll deal with that tomorrow. I'll figure out
Okay.
something.
We'll make
So,
sure we get the Telegram up, because we're not great with this. I'm a Twitter guy, but I have 0 followers. So
yeah,
guys, without further ado, it's Rocket. I'm sorry, Twitter is not great. I'm sorry, Twitter. Discord. I don't like Discord. All right, guys, please cut this out, editors. We'll see you on the next one.
take care, guys.